Welcome back to the channel. Today we are talking about two stocks that can surge by 90% in their share price. For more videos on the best stocks to buy, please go press the like button and subscribe. With that being said, let's dive straight into today's stories. We have identified two solar stocks that have captured the attention of industry experts. This recommendation comes from an analyst who envisions a substantial upside potential of at least 90% for these stocks. The global shift towards cleaner and more sustainable energy solutions, driven by both societal and political pressures, has created a fertile ground for companies specializing in renewable energy, especially those involved in residential-scale solar installations. The advantages of residential solar solutions are multifaceted, offering homeowners not only a greener energy source, but also autonomy from the traditional grid and the opportunity to contribute surplus energy back to utility providers. However, despite the promising outlook, the residential solar industry has faced challenges in recent times, primarily due to the impact of elevated interest rates on the financing of solar installations. Nevertheless, with signals suggesting that the Federal Reserve may initiate a rate reduction in the upcoming spring, analysts anticipate a more optimistic trajectory for the residential solar sector in the near future. Mizuho analyst Maheep Mandloi, a respected authority in the field, has provided a nuanced perspective on the industry's prospects. Looking ahead to 2024, Mandloi anticipates pivotal developments that could reshape the landscape. These include a potential slowdown or reversal of interest rate increases, clarification of the next phase of IRA rules by the US Treasury, inventory absorption in the first half of the year, and heightened demand driven by declining equipment costs. While Mandloi acknowledges the possibility of pressure on residential solar demand until interest rates peak, he also identifies potential areas for increased value creation. This includes the growing adoption of energy storage, impacting renewable system costs and offsetting the rise in electricity expenses. Delving further into his insights, Mandloi turns the spotlight on two solar stocks that stand out with substantial upside potential, surpassing 90%, according to Mizuho's forward-looking forecast. The first company under scrutiny is Sunnova, a stalwart in the US residential solar market. Established in 2012, Sunnova has expanded its operations to cover 47 US states and territories, offering end-to-end services that range from the installation of rooftop solar panels to the seamless integration of power storage batteries. What distinguishes Sunnova is its customer-centric approach, tailoring residential solar installations to suit the unique needs of individual homes. Headquartered in Texas, Sunnova collaborates with over 1,900 dealers, sub-dealers, and builders to serve its ever-growing customer base, which surpassed 386,000 as of September 30th, 2023. Despite Sunnova's recent earnings miss for quarter 3 of 2023, where revenue reached $198 million, which is a notable 33% year-over-year increase, and a quarterly loss of 53 cents per share, which fell short of estimates by 16 cents. Despite this, Mandloi remains bullish on the company's future prospects. Highlighting Sunnova's prowess in financing and the governmental support it receives from the Inflation Reduction Act, he points out the company's ability to capture market share, its growing internal rates of return, and value creation amid electric bill inflation and decreasing equipment prices. Mandloi confidently assigns a buy rating to Sunnova and accompanies it with a $20 price target, indicating a robust 96% potential gain over the next year. Sunnova maintains a strong buy consensus rating from 20 recent analyst reviews, with 15 buy recommendations and 5 holds. The current stock price stands at $10.22, and the $18.92 average price target implies an 85% one-year upside potential. The second noteworthy addition to our list is Sunrun, a prominent player in the US residential solar power market. Sunrun distinguishes itself as a comprehensive service provider, specializing in customized solar installations for single-family homes. While the term rooftop solar panels may evoke images of the simplistic installations on the White House during former President Jimmy Carter's era in the 70s, Sunrun's technology and aesthetics have evolved significantly. The company not only designs but also builds and installs high-end solar packages tailored to meet the unique needs of each customer. Sunrun's comprehensive package deals include rooftop photovoltaic panels, grid connections, advanced smart control systems, and state-of-the-art power storage batteries. Moreover, the company extends financing options and multiple payment plans, allowing customers the flexibility to pay in advance, in full, or to set up long-term payment plans with equipment leases and monthly payments. The flexibility in financing has propelled Sunrun into the top tier of residential solar providers. Notably, in the third quarter of 2023, the company welcomed 33,806 new customers, with 29,303 of them being paying subscriber additions. The net subscriber value reached an impressive $11,030 through the third quarter, emphasizing the company's continued growth and success in the market. While Sunrun experienced a peak in revenues in the second half of the previous year, there has been a slight downturn since then, attributed to prevailing business challenges, including high interest rates. The anticipation that interest rates could align with the downward trend in inflation during the first quarter of the coming year is seen as a positive factor for a company that relies significantly on customer financing. Now, turning to analyst Maheep Mandloi's perspective on Sunrun, which is notably bullish, this positivity is attributed in part to the company's utilization of a lease-based long-term payment model, which Mandloi anticipates will become increasingly crucial in the industry's evolution. Summing up his view of Sunrun in a recent note, Mandloi states, "Sunrun is the largest third-party owner and developer of residential solar systems in the US. We are buy-rated owing to Sunrun's leadership in the US residential market, where it is gaining market share in an adverse environment as the industry switches from loans to leases. Its improved value creation, due to electric bill inflation, coupled with a decline in equipment prices, upside from tax credit adders under the IRA, and an attractive valuation despite higher interest rates." Mandloi's buy rating is accompanied by a $23 price target, indicating a robust 103% upside potential over the next 12 months. The broader sentiment on the street is largely positive as well. The moderate buy consensus rating on the stock is based on 20 ratings, with 14 buy recommendations compared to 6 holds. The average target price of $20.90 suggests a substantial 85% upside from the current trading price of $11.31. As we explore the landscape of solar stocks, Sunrun emerges as a compelling investment opportunity with strong growth prospects in the evolving residential solar market. If you want more videos on stocks that can surge, please press the like button and subscribe. If you are already a subscriber, consider becoming a member so I can make more informative videos about the best stocks to buy now. With all that being said, I wish you the best of luck and happy investing.